second, slightly more serious question, though, which is, what is your biggest challenge that you face? Is it asset class expansion? Is it regulation and compliance? Is it liquidity or the lack thereof? Or is it costs? So, Richard, the biggest issues facing you?
I would say in the space that we are in, being in a disruptive space, I find that the pace of regulation in some of the countries to be actually slower than I was hoping. Because many of this regulation was created to protect the man in the street. So they always go for what is the most common denominator. And at the same time, some of this regulation was written 20, 30 years ago and hasn't really evolved with the market. So when we attempted to try and marry the OTC FX into the exchange traded space, there was a lot of hurdles to cross. But the biggest hurdle I would still say is actually the mindset. Because the equity industry has been largely the same. There's some evolution, but there hasn't been really a revolution for probably 3 decades or more. And to cause someone to say, actually maybe the way that you've been doing could have been quite different. And sometimes we even say that maybe it was the wrong way. And we always get a pushback. Because this is how I've been doing it all my life, and it cannot be wrong. And as we were being asked such a question, sometimes we thought maybe the best answer is to say, just for a second, imagine the world that has already evolved into the new paradigm, the new space. And then look back and say, would you want to go back the old way? And that actually causes a little bit of rethinking. So I would say actually regulation, but in terms of the speed, we find it a bit slow, especially in countries that has a capital control on the currency. In Korea, in Taiwan, certainly in China, the equity market is ready, but then at some point you still need to do the last mile conversion. You need to get your dollars and your euro in, and eventually you want to get it out. And this last part still remains quite a challenge in terms of the friction.
Well, isn't that because people have vested interests in keeping that market OTC and DAQ, because that way they can keep the spreads very high?
Actually, that's quite true, because one of the characteristics of an OTC market is that it's not a single venue, a benchmark that you can go down and say this is the correct price. There are plenty of venues that's out there, maybe more than 200, and all of them are actually not regulated. They are portals, they are groups of banks getting together to serve a certain community. So it's actually very, very challenging for anyone to get a right price.
So let's get this right. So there's a $3 trillion a day market out there that isn't regulated, that is traded on 200 fragmented platforms that nobody's regulating, and nobody's talking about this.
Absolutely. Now, if you look at some of the in the press, not just in the last 6-9 months, but even the last 3 years, there's been 2 sets of legal action. The first set was against some of the custodian banks, mainly by the pension funds. They say, I don't really know how much is my end-of-day conversion being done. It's done at some kind of benchmark, kind of below the day's high if I'm buying, a little bit above the day's low if I'm selling, but I really have no visibility. And the second set is after the LIBOR, whereby some of the central banks are now looking at this in a more serious way. Is there an alternative? But I guess coming from the FX market, the players don't really want more regulation. But that is not really what everyone is aiming for. But from the customer side, they're asking for more clarity, transparency. Maybe there's some balance in the middle.
Yeah, I mean, to me, it's sort of, and I come from an equity background, so to me, FX is crying out to be traded on a lit market, in a central marketplace that's open, transparent, with easy clearing and settlement.
But one of the challenge of an OTC product like FX versus a listed or traded security is that in a listed security, you have all the bid and offer coming in, producing a whole order book. And if it's a lit market, you can see it. If it's a dark pool, you kind of don't see all of it. But in the FX world, there isn't such a concept because you still depend on market makers that's out there. Although, interestingly, every financial institution will purportedly that they can quote FX. But all the FX eventually revolves around the top dozen or of banks. We did a quick search. The top 10 banks comprise of 78% of the market share. The top 15 is like about nearly 90%. So actually all you need to look at is just this top 10, 15 to get together and create some kind of a fair play, a common place, a protocol, and that might work.